I want to tell you a story of where modern insurance actually began. It's titled, From Pirates to War Risk, How Lloyd's of London Built Modern Insurance. When most people think about insurance, they imagine car accidents or property damage. But the origins of modern insurance go back more than 300 years to a small coffee house in London, a place where merchants gathered to discuss ships, cargo, storms, and pirates. Yes, I said pirates. That coffee house eventually became one of the most important financial institutions in the world. Today, I want to explain how maritime insurance began and how that system still protects global trade today. The origin of the story. In the late 1600s, merchants and ship owners regularly gathered at Edward Lloyd's coffee house in London. Shipping was the backbone of international trade, but it was also extremely dangerous. Ships crossing oceans face enormous risk. Violent storms, shipwrecks, navigation errors, and attacks by pirates. Merchants needed a way to protect themselves financially if a ship or cargo was lost. So investors at the coffee house began agreeing to share the risk. If a merchant wanted protection, individuals would literally sign their names under the description of the risk. That is where the term underwriter comes from. Over time, this informal gathering evolved into what we now know as Lloyd's of London, a global marketplace for insurance. The original threat, pirates. In the 17th and 18th century, piracy was one of the greatest threats to global commerce. Merchant vessels carrying spices, textiles, and precious goods were frequent targets. Pirates were essentially the terrorists of global trade at the time. Without insurance protection, merchants would have been reluctant to send cargo across dangerous oceans. Insurance made global trade possible by spreading the financial risk of loss. Even if a ship was captured or destroyed, the merchant would not lose everything. This system allowed commerce to continue despite the dangers of the sea. How society has come full circle. Today, the risks facing ships are different, but the principles remain the same. Instead of pirates, modern maritime risk may include missile attacks, naval mines, political conflict, regional instability, and piracy in certain areas of the world. To address these threats, insurers develop what is known as war risk insurance. War risk policies protect ships operating in regions where conflict or geopolitical tension creates extraordinary danger. Although the threats have evolved, the system built centuries ago at Lloyd's still protects modern global trade. Why does this matter today? When risks increase in critical shipping routes, like the Straits of Hormuz, insurers reassess whether they are willing to provide coverage. If insurance becomes unavailable, ships often cannot enter those waters. Ports may refuse entry. Banks may refuse to finance the voyage. And shipping companies may suspend operations. In other words, without insurance protection, global trade can slow dramatically. Insurance remains one of the invisible systems that keeps the world economy moving. The big takeaway. 300 years ago, merchants feared pirates. Today, that threat may be missile, mines, or geopolitical conflicts. But the principle remains exactly the same. Insurance allows society to move forward, even when danger exists. It spreads risks so commerce, trade, and economic life can continue. That simple idea, born in a London coffee house, still stabilizes the world today. I'm Sal Espinoza, and this is Adjusters Academy. If you found this interesting, please like the video and subscribe for more insights into the world of insurance and risk. You can follow future content here at www.youtube.com/@Adjusters Academy. Thank you for listening.